All right, welcome, team. So I decided to do another recording based on the trades that I did last night. So I did some trading last night, and as I said to you in the previous video, I was doing some 2-hour trades, and you would have seen them because I quickly glanced over onto them, and they all got up, plus a few other extras that I did that night. Now these are only demo trades, so full disclosure, they're only demo trades. That was just to see what these 2-hour trades would go like, and just to basically get a little bit more of an understanding towards you guys as students, because a lot of people can find the lower time frames quite anxiety driven, and they can be because they're so they move so quickly, and nothing worse than what you've seen with some pocket option trades where you'll be in profit and it's a 1 minute trade, 1 minute half trade, and then because your entry point's so close to when take profit takes, unless you manage to catch the absolute fall, quite often it can just move up and you get stopped out, and with like only a few seconds to go to then just continue its move down. So to sort of alleviate that and to remove that from the equation, I was like, well, let's do some longer term trades using our smart money concepts. The same trading, go back, watch the last video if you haven't gone and seen it, and we'll go through a few of these things. So I can't actually show you on the pocket options account itself because, well, the markets are shut right now. So I can't even go in and show you it comes up because they're all blocked off, which I don't know if you can see here or not. They're all closed. So I can't even just go in and open them because the markets are shut, which is really annoying. I thought you should be able to still see the chart, but they're not allowing you. So I'm just going through on pocket options, the trades that I did. And I've got photos of these, which I sent through to my students as well, just to sort of the guys that are a bit more advanced. Now, I have already put that there, so it doesn't really help, but this is GPP AUD. Now I'm looking at the 1 hourly, same thing, obviously 1 hourly on the pocket options account, just identifying key areas. So at the time, the price when I was entering my trade was here. Okay. So, we could start to see that we were trending now. We're starting to respect the EMA. We had multiple bounces off. Okay. But clearly, even though a lower low technically was formed, right, and then some inner range liquidity happened. So, because a lower high was created here, it could give the interpretation that we're actually going to go lower because we had a lower high, but it's just inner range liquidity. And then when I saw such a strong respect off the EMA once, twice, 3 times, right, that shows some real bullish sentiment. So we're not coming down to the bottom of the Bollinger Bands. We're really starting to move up, right? Especially when there's like a really key, like in form of imbalance, which it didn't come back to, or kind of pretty much did there, but not really. But so this for me, based on the 1, 2, 3 touches, good confirmations that we are going to continue to go higher. Now, what's the area of interest that is of higher, right? So that's obviously this wick area here. We can sort of already see on the 1 hour that this particular, imbalance here kind of already got filled, right? And obviously here we had resistance coming through once, twice, 3 times. So, in here is essentially more inside this wick would be where there is some area of interest. So very simply, come in here, click the rectangle, right, make our rectangle in our area for our area of interest. And then we just need to go down timeframes to see, because obviously that won't be a wick on lower timeframes. Now, I went all the way down to the 5 minute. I tend to look at the 5 or 15 with these longer 1 hour trades, as opposed to like the 1. I don't really look any further. So now we obviously just scroll, and I've got my mouse today, so it's so much easier. We scroll across, and obviously there's our highlighted box. That's still that same area. Now, what we can see within this highlighted box when we zoom in, okay, is there is a specific area of interest. It's not a clear cut IC area, but remember, this is multiple candles. So, really on the 15s is a really good one here, but I can see just a little bit of imbalance that's in this area, which is, where that whole manipulative move went up. So this is essentially that whole wick on the 1 hour. And then in here, there's an area of interest, right? And I can see that we've got an area of imbalance in here, which is within this IC move, this doji candle, just ignore that. And what I'm going to do is just put a horizontal ray that shoots across the screen, and I'm going to put it into this area of imbalance in there. Okay, so just going to go boom, because I know for me that is where it needs to come back to. And if I go back to the 15 minute, right, we can see it a lot more clearly where, yes, there was, there's our obvious IC candle on the 15 minute, the last up before the down that broke structure. Remember, IC broke structure. So this was our previous low here, last up candle before the down move, although it wasn't a significant close, it's still, this low is lower than this low, right? So it came down and took this liquidity. That would have actually been a really good trade. As you can see, you had a move up, you had an engulfing candle, a retracement to roughly around 50%. This would have been an awesome sell-off. Clearly, price is going to come down because we've got some liquidity resting here, some equal lows. Boom, boom, boom. That would have been an awesome sell. That's a 15-minute. So, there's like three hours worth of downward. You would have cleared that, no problem, with a 2-hour trade. So, based on that, right, so as we can see there, I've put that there. Now, that is an area of interest, right? So where have I looked to trade? So if we go back to the 1 hour, come on. Oh, what's up here? I don't know why it's up there. And we have a look at this. Bang, look at that, right on it. And I'd already had that marked up, and I was patient because remember, as I said, I was only about here when I saw that clear area of interest for me, right? So I know that price needs to return to here because I've marked it up. Okay, so it's just about being patient and waiting for that opportunity to present. Now, you need to also make sure that you don't jump on as soon as it hits there, especially with this method of trading, because it could just continue to go higher because there is still more IC areas, albeit that it's, way up here. So that's probably one thing that's going to alleviate, but it still could, right? There's some imbalance that needs to be filled up here, right? So, it could still go higher. So you need to see signs of weakness. And for me, the big sign of weakness was this doji that was formed straight after. Dojis are really good, right? So as soon as this comes up, we have a rejectional wick. So essentially, remember, wick structure. So the candle did push all the way up to here, and then weakness was shown, and it ended up closing and finishing here, which is almost more than half of the body. Shows big signs of weakness. We've come up, we've gone for another push again, and then we start to see the reaction. So essentially, I've got it in for a sell on this candle here, on this wick, right? And if we just go back to the 15-minute, as clean as a whip. Again, on here on that 15-minute, look at that. Boom. That was super clean, right on the top of it. Now, there's not a huge amount, but in here, there is still a little bit of imbalance that's found in here. So if I shoot, so remember, so essentially, guys, that is my initial wick that's come up to that area and then rejected off. This isn't our entry point. Okay, this just shows that, we've come up, we've filled that order, closed all that, and now we're going to continue to make our move. But this is why you sort of don't tend to get in initially on here, because although, yes, it didn't come back up, sometimes it can just sort of just sit around your entry point for ages. And with this form of trading, because it's obviously a time-based trade, you don't want it to be sitting around your area. So you need to see another entry point, another time to come through. And, we had another area of imbalance in our IC area, which is just here. It's a tiny little one again, but on the 5 minutes, a lot bigger, but it's too much stuffing around. So head here, that secondary horizontal ray, and look at that. Just come up into that area. Okay. And then again on the 1 hour, if we go back to that, boom. And I see that form. So that's for that one to fall down for the secondary sell. So I just jumped ahead. Sorry. Excuse me on that one. So this particular move here, once I see this secondary wick form, this is where I get in for my sell. Boom. We've come back. We've come down. And as I said, 2 hours is all you need. And it was 1, 2, massive clear by shit ton. But then it's respected and still respected that EMA and bounced through again, continued its move. It's being patient, waiting for another opportunity. I already had that marked up, so I just jumped one ahead again because there was another area of a little imbalance in here. All right, so come fill some more orders, and you have so much resting liquidity to the downside. You've got all of this down here, so lots of lows plus this initial low here, which is almost equal lows, because there's also over here on a high time frame, there's some equal lows there. So what we can see now is I then got in for another sell in this point here, 2 hour sell, 1, 2, boom. Right. So that was a really clear cut one because we've got multiple top touch points. Now, if we can sort of see what's happened now is we've gone down, we've swooped these lows that were here, right? We've come back up, we've respected the EMA again, massive wick down. So once markets do open, I can see us pushing down and taking this low. So that's why it's really important just to, because we've obviously got imbalance. So what that actually wick did to make sure, because it's obviously the markets are closed now, it's the weekend. So they need to try to close their orders and any kind of imbalances or whatnot, to mark out the week. So which is why that has finished right there, which has filled this imbalance, which is also the close of this one here. So again, we get our horizontal ray, and I'll just shoot it across here. That is the last down candle that before the up move. So this is the entire up move that came up, and technically, well, it's equal, didn't quite break structure, but it's still an imbalanced area. So if we go here, have a look at the top of that candle, boom, right there, kissed it, which is why price came down here. And I could see that, which is why that was my target. If I'm doing smart money concepts in terms of high and low, or in terms of a take profit area, that was 100% my take profit area, right? To fill that imbalance, because this move has come down, the wick has come through and filled, not only has it taken those lows here, right? Which there was quite a few, there's some equal lows, 1, 2, 3, 3 equal lows, 1, 2, 3, but also filled the imbalance and touched the open of that previous candle, that IC candle. Bang, happy fucking days, happy days. So that's just an idea. And so, because this is me essentially going back to smart money concepts using on the HFX side of things. So therefore, we take a little bit of the anxiety out of it. And because obviously, this is only two trades over 4 hours, if not more, sorry, because this was our area point here. So that was early in the day. And then this was like 8 hours later, because they're all 1 hour, right? Before the entry came again. And I set this before bed and then watched it fall away as I slept. Obviously didn't watch it, but I woke up to it in massive profit. So, this is two trades, bang, done. If you're doing a higher risk or higher percentage in terms of your risk that you're putting through, you don't need to do 10 anxiety-ridden trades at 1 minute. Now, I'm not saying some people like those lower time frames. They don't like to be in the market too long, and that's absolutely fine. This is just providing another alternative for you to try out, for you to test run, for you to back test and have a bit of a squeeze at, because this is really powerful. Going back to your smart money concepts, I know I've got a few people that came from smart money, came into HFX. I strongly suggest that you start looking and remembering what you learned through that process and apply it to this. Because what's really cool is, you don't need to try to catch X amount of pips. You just need your entry point to make sure it's obviously below or above, depending if you bought or sell, and for an X amount of time. The reason why I've just picked 2 hours is because, you generally need just price to move away. In theory, like you could do more. You could do 3 hours if you wanted to, looking at this 1 hour time frame, because most of the times when my entry point's in, 1, 2, 3, boom, 1, 2, 3, clear away. As long as you're looking to make your entries, that's another thing as well, guys. Make sure, this is a little bit different, but most of my entries that I'm looking for on the 1 hour, as in a 2 hour trade on the 1 hour chart, is looking at IC areas ideally near the Bollinger Bands or above. As you can see here, hugely above here, touch point above, right here, right on. Again, this was in between, but I just know that this is a key because this is our key low. So even though it's not on the Bollinger Band, I know this is a key entry point. And as it is, I didn't, buy from there. In theory, you could have bought from here. If I was awake, this would have been a really good buying opportunity presenting here, because we respected it once, respected it twice. Then once we see this open above and start to move, I'm going in for a 2 hour buy. Bang, 1 hour, 2 hours, you've cleared easily. So, it doesn't have to be, but that is respecting, even though this is our IC area, which is not near the Bollinger Band, this is, right? So that still shows confluence in that area. So, and the other trades that I do is off the EMAs, which is essentially off this. This is a bit more advanced form of trading, and it's just basically a bit more retail method of trading, and that's just seeing multiple touch points. Okay, so if we can see here, bang, bounced once, bounced twice, right, come through and bounce a third time, generally the third time, and as long as it doesn't close below, which it hasn't, third time, it's that typical M, right? I don't always do it, but if it's there, you go in for a buy here, 2 hour buy, 1, 2, clear. Now, only if there's a clear, obvious IC area that it knows it needs to come to. If this was not here, and this was like way up here, you saw the M, I don't think it's as much of an opportunity for me, right? So, like another example, we got touch point. This went a little bit low, but touch point 1, touch point 2, touch point 3, you know, then there was another fourth one, then we've come up. This is a bit more risky. The candles is not as nice. I don't like it. This is a bit more up and down. I was just trying to see when it's a bit choppy like this, just avoid trading. But that's another one that I do is when it respects this EMA, or what the other blue line that I've got through here is the 14 EMA moving average. So this blue line is the preset already in the Bollinger Bands. The Bollinger Bands, remember, I'll just have it here. Bollinger, this is the same settings as your ones for pocket options, 20 and 2, right? So that's already preset. And then if you go to, I might just change this color here. I might make it, and then the lower, so you can see that just the lines color difference. Actually, that's worse. I don't like that. Ignore me. And then the other one is just a moving average. So you just go to indicators, moving average. It's on pocket options too. And the settings is for that 14 and EMA. Okay. And for that one, I just changed. I'm going to change the color so you can see it a little bit clearer. So you've got two different lines going through there. Okay. Now that 14 EMA is really good. You just quite often see a lot of respects off the EMA. You can see here, right? Respect again, close below, even though that's come up. So this is one where I'll often trade off too, if I see respecting off that. So it's just something to take into consideration. So that's that one. Just wanted to look at, let me just stop this share for a second. It's just really laggy when I try to do this. I want to show you my other one that was right, and that was on GBP AUD. That's the one I was just on. The other one was NZD CAD and CAD JPY. NZD CAD and CAD JPY. So NZD CAD. Just need to put it in here. NZD CAD. Cool. Apologies. NZD CAD, and that was a sell. Yeah. So NZD CAD. See if you can see it. I'm going to leave it here for a second. This one's a little bit harder. This one's clear cut. But what I'm going to do is just mark areas of interest for the next point coming through. All right, there's a very area. Doji is not the best near an IC candle, but on a high time frame, that's all one candle. There's area of interest in there. So this is an area where no one wants to come back to. Now, have a look at the downward move. This has been quite evenly traded out of, which isn't ideal. But again, have a look at where price finished up. Where's our imbalance? Our imbalance is this entire section here. Came through and closed all that imbalance to finish the night. Let's have a look at what I was looking for an entry. Okay, so left it for a little bit so you could have a bit of a squeeze. Now, at the time, charts were, if this helps you out at all. Oops. Right there. Charts was like this. So we had come down, we had swooped the lows just and filled a little bit of this imbalance. So for me, I was like, well, that's, you know, it could retrace further down, which obviously we know that it did, but I'm seeing that we're going to react off this area here. So we are now going to come up. Now, are we going to come up and to this area, which is possible, right? Because I know that we need to come back in there, but there's obviously another area of interest as well. And that is in the IC area that is in here. right? We've got this whole downward move, and then we have this one quite bullish engulfing candle that engulfed this prior one, came up all the way and touched. That's quite a big move, right, for the upward, considering how aggressive the downward move was. So this is where I'm looking at right here. Okay, this is where I'm looking at. Now, what inside of that? Where's the imbalance? Well, we can see this whole purple candle here that's downward move. Yes, we came up a tiny bit, but not much, like in that move. This is when I'm roughly got on. I can see that there's going to be a bigger retracement, and ideally it's the close or the open of this one. Sorry, the open, not the close. Ignore me. So horizontal ray. Sorry, I'm all over the spot. That's the open, which is almost at the 50% of that downward candle anyway. Okay, so that's a good area of interest. That, boom, came and touched it. This point here, 2-hour trade, boom, down we go. Now, if I break this down to a lower time frame, you'll see that, you know, there's our open, same open spot, come down, there's our imbalance. We retrace a little bit higher, but not by much. Fill that whole imbalanced area. But we're essentially, I look to make my move is, again, on this first point. Because it's mid, this is where I guess the difference is slightly. If I go back to the 1 hour, just to make sure I don't confuse you. Because we're inside the move, so this is an EMA trade. What I find with the EMA trade is you'll just come up and you'll hit it, and then it'll move, right? So this one here is a little bit more risky. As I said, I'd rather you stick to more of those last ones that we did, but this is more for my advanced guys who have been trading now for a little bit. When you see a very clear respect off the open, and I was watching that live, and I started to see that just fall away quite substantially, I'm getting in for a sell straight away. Because generally with these ones, it's up, and the EMA, they touch, they move off, they come in, they touch again, they move off, they come in, they touch again, they move off. You know, sort of like this thing. You don't get multiple chances, and you don't really get a mitigation return, what I found, okay? You know, let's see more like here, right? So this is more a similar sort of move. We came down, we come up, we touch it once. That's where that 14 comes in handy. But pretend that was the middle. Like we come up, we hit it a wick, and then we come back off again. We come back, we hit it, we come back off. Generally, it doesn't ride it. It just up once, up twice. So with these EMA trades in the middle, right, we need to, I personally get in straight away on it. As you can see, bang, massive clear. Now it has come back and returned overnight. I was asleep for this, didn't see it. And it just gave you a deeper retracement. So like if you happen to be awake, you know, we can, this is inner range liquidity. This is our high. This is our low point, or at that time, this was our low point, right? Now we've got a high here that looks like it wants to be taken. We've got more imbalance still need to be filled. That's still open there for if it needed. So if I was watching this live, came up, we actually pierced the Bollinger Band. We have this rejectional wick pulling back here. And, you know, we go in for another sell for 2 hours, 1, 2, bang, clears, easy. Knowing that we have lows to be taken here, we have a little bit deeper in the imbalance here to be filled. So there's a really good opportunity, and we're clearly just still bearish. So this would have been a good opportunity for a sell-off as well. Now, the last one is that I just want to go through with you guys. CHF JPY, NZD KJPY, also got KJPY as well. That was the later one. CHF JPY. CHF JPY for a buy. CHF JPY. Not a huge fan of always trading the Swiss pairs, but it does provide opportunities that I am a fan of. Especially more on these longer term trades, these longer term trades. I'm just trying to find it because I didn't have it. I had it marked up on pocket options, not on trading view. This was just the EMA trade, very short. I really wish I could see pocket options. NZD KJPY. I just showed, did I show KJPY? What was the last one? Maybe I might just show you CAD JPY because I can't tell exactly where I entered on that one. Sorry. CAD JPY. That's CAD. Apologies for the feel free to skip forward a little bit. Had the first ones marked up, but I was going to show you 3, so I just wanted to show you one more. Yeah, sweet. That's where it was. Okay, so CAD JPY, CAD JPY. I'm just going to show you this one. Yeah. Last one. So if we just go to the 1 hour, this is where you sort of do need to make sure you jump time frames a little bit, okay, to be able to see areas of interest. So at the time, price was here, okay, here. So a lot of resting liquidity, yes, that's for a target for later because it never actually ventured down that way. But we can see, right, come up, come down, we flipped the EMA. Now we start to see very bullish sentiment going up. Now there's an area of interest here, but for me personally, it kind of had already been traded out of from this one, right? Yeah, there is a little bit of imbalance and a lot of time frame that would have been a little bit higher, but I feel like that's going to be taken. So it's about being patient and waiting and seeing an opportunity. So where my eye gets drawn to next, where's your eye get drawn to next, guys? See if you can pick it out. Pick it out. 3, 2, 1. Right here. Area of interest. Simple. Horizontal ray. Horizontal ray, shoot that across the open. Last up before the down move, the broke structure. Last up yellow candle before the down move that took the previous low, broke structure. Right, so that's an area of interest for me because this has already been traded out of, and that one already traded out of this one, and that one didn't break structure anyway. This one did break structure or continue structure break, but it kind of had already been broken out of. And also based on where I'm looking at now, we can sort of see that it's, yes, it came up and respected out. So you could sort of think that, all right, we might be looking at coming down. It's just not taken, but just those highs look like they're getting taken for me. And it's also another reason why with these ones, especially when they're at the Bollinger Bands, we don't jump in. EMA is a little bit different, but with these Bollinger Band ones, we don't jump in straight away. We be patient and we wait and we wait and we wait and we wait, right? Now, oh, that's that area one. Oops, I want 1-2 area. It's the top here. My bad. Because it does come back there, as you can see there. That was for another sell-off, right? Which is there, bang, which is on the second entry point. So this is where you can come through, bang, look, we've come up, respect it off, second candles come in, come back to that open area. That is essentially like your 50% retracement on the 15-minute, bang, sell off trade. That's actually one that I did as well. There's this one in here though that I wanted to show, which I also did. I did this twice. Okay, this one was the overnight one. So, I'll just break this down a little bit more. 15-minute, we go to that line. Come in, hit it once, come back in, hit it twice. So the one come up above the secondary candle, like there's 3 wicks to the upside, bang, sell off. Doesn't look as clean cut there, I know, but wait, yeah, it is there, because there it is there. But on the 1 hour, as you saw there, super clear. For me, 15 sometimes just to make sure there's no other area of interest up higher that I need to be worried about, but there wasn't. Okay, so bang, reject, up once again, reject, 2 hours sell, 1, 2, boom, that was overnight. Happy days. So the other one, as I said, was actually in here, which I've gone too far ahead because I was doing this. I'm like, where is it? I was trying to work out where it was for you guys. Keep it hidden, sorry. So in here it becomes an area of interest, right? So then we go through and we break that one down previously because, as I said, price was currently in here. Is there anything in this wick that I need to be worried about? Okay, we're going down to the 15-minute. We have a look at that first square in here. Was it 15 or the 5? There's the 5. Yeah, it was the 5. Yeah, horizontal array. Got equal highs. Plus, here's your IC candle, last up, okay? Fall down, there's left imbalance, 50%. So not only you get 50% of that IC area, but you get your equal highs. Go back to the 1 hour. Why does it do that? It like disappears. Where are you? Okay, so there's that there. Through that one, come up, we've rejected off, right? So if we just go back to the 5 minutes, I can see. 15, sorry. So here, as I said, with this one that we had on that 5 minute, you had that imbalance. You had some more throughout that area, right? So we come through, we can see that wick form here. Wicks come up, rejected off. A doji's then formed straight away. Doji areas are really, really good. You get into that sell, see you later for that 2 hours. Remember, so that you've cleared that easily. It's finishing up here, right? Bang, happy days. Has come back again, but then that's where I got in for the second trade, right? And going in again, as you can see, another doji's formed in that 15-minute time frame. Bang, sell off, 2 hour sell. See you later, right? Doji's like just usually good indicators of reversals. Not always, really important, not always. But as you can see here, right, touch the bottom. Doji's formed once, formed twice. And then we've gone through. Sometimes you get multiple dojis. That's why I like to increase my time frame, my trade, because you might get a little bit of sideways action. Have a look here. Doji 1, definitely doji 2, boom, reversal. Doji's reversal. Doji's reversal, right? So again, not always, but quite often doji reversal. Now there's a heap equal lows here, 4 or 5 equal lows. That's an area of interest now for moving forward for when the markets open back up on Monday. So now we sort of see where we are. Right, these are all these equal lows. So now my area of interest becomes down here. So again, I get a horizontal ray. I just shoot this across because that also shows me my equal lows, right? So now what in that area is an area of interest. Now we've got this imbalance here, which we still need to come and fill. So obviously I'm looking for sells. So I'm actually going to be looking for a sell ideally from this area. Overall, though, sentiment, what are we doing? You know, we are trending down, as you can see from this climatic point. You know, we've done nothing but trend down. Yes, this come up and took this. But, you know, ideally, if we see a reaction from here, because yes, technically we have now created a higher low, but the market has finished close at a higher high off this, but it can be again in a range of liquidity. So if we will get a reaction from in here, and if we do, awesome, I know my target point's here. If not, and we end up falling down through here, we see a reaction point potentially from here, and we continue its upward move to then attack here. So just essentially, guys, it goes from IC area to IC area, or if there's ranges of liquidity. But generally, if there's a lot more equal lows, that's a bit more of a target area for me. So as you can see, so many low points. So this is a massive area of interest, plus almost this one here. And these also, all these 4 areas are inside this IC area right here. Okay. And each have come in traded into, but there's still a little bit more of a deeper one. So what they can do is essentially come down, take those lows, which is the pending orders, come into this IC area, and then continue its upward move, because technically on a bigger time basis, have a look how bullish we are, right? Nothing but crazy bullish sentiment. Boom, 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 boom. That's why, like, you know, you need to sort of understand what's the actual market doing. Where's it trying to go to? What's it trying to find, to understand where we're going to go to next. So the fact is, this still overall seems bullish, but I think we're going to see a slight retracement down to this key area, potentially even this key area here, before it continues its upward move. So as I said, just want to make some decisions and see what's happening. You know, at the end of the market, the things are pretty much dying here. But I'd like to see the market come and take this. So ideally, if we can get a re-entry point here for a sell-off to take these lows, you know, we don't even need to take the fucking lows. That's what I love about it. Like, we don't need to take profit area. We just need the price to be above or below our entry point for our time frame. So hope that makes sense. Sorry for the stretch. Oh, I've been sitting too long and I got footy today. Appreciate you all. There's some longer term trades for you to dabble, have a bit of a squeeze at the markets, do some practice runs, you know, try it on the OTC if you need to, but remember 2 hours on the 1 hour time frame. Look for those areas of imbalance, those institutional areas as well, mark them up and just leave them there and just see how they go. You know, just trial the trades. And if you're obviously doing a trade in the EMA, it needs to be a lot faster, you know, a lot quicker reaction speed on that one. All right, guys, appreciate y'all. Send us a message if any questions, or if any of this doesn't make sense, and give this one a bit of a crack, guys. All right. Have a good day.